Ladies and gentlemen, my name is Greg Mikulowski with a Forex quick look at the euro versus US dollar, sort of a preview look of the currency pairs we head into the FOMC rate decision tomorrow at 2 p.m. Of course, price action between now and then it could cause this the price to extend either higher or lower depending upon what happens, what comes out. But but the market seems to be settling into a neutral area, and let's talk about that from a technical perspective and from what we may expect going forward. So sit tight. Let's get going. Looking at the euro versus US dollar on the hourly chart, the neutrality of the market comes in from things like the 200-hour moving average and the 100-hour moving average. The current price is just above the 100-hour moving average. That's a blue line in this chart at 1.0583 on the top side. The 200-hour moving average comes in at 1.0703. Should be 1.0683, I should say. On the downside, 1.0703. On the top side, the current price is trading at 1.0688. Just above the 100-hour moving average in a neutral technical area. We did move a little bit above the 200-hour moving average earlier today, and that took the price up to this trend line up here, and we did move below the 100-hour moving average later in the U.S. session that took the price below that level, but short of this lower trend line right through here. So we're in between this triangle right through here, and a break above the high trend line or below the lower trend line would increase the bullish bias or decrease the bearish bias. On the downside, we also have this swing area here, and the low price came in at 1.0631, which is near a low area, low support at 1.0635. You need to see that off the daily chart. The 1.0635 level was the lowest price going back to the end of May, right here, May 31st, where the low price came in at 1.0635, and this low price that we saw last week came in at 1.0631. A move below that level will then target the 38.2% retracement off this daily chart. This is of the move up from the September 2022 low to the high price that we saw in the month of July this year, and that comes in at 1.0610. What I can say is that if tomorrow we get a more hawkish, unchanged policy, the Fed is expected to keep runs unchanged. Getting below the 38.2% retracement would be key. So keep that level in mind, 1.0610 as a key level to get to and through to increase the bearish bias in the euro, to increase the dollar's bullish bias. If we get below that level, we look toward this swing area, which it is above and below the 105 level, 104.84, 105.33. So right around the 105 level, where a number of different swing lows and swing highs through here, forming what was a ceiling and then a floor through here. So 106.10, 105.00 down to 104.84. Get below that level, go toward the 50% retracement of the same move up from the September low to the September 2022 low to the high price that we saw in July. That would be the progression on the downside. So keep those levels in mind going forward. Get below the 106.10, starts the move to the downside with a target of 104.05 perhaps for this pair. Now on the top side, going back to the hourly chart, and if we look at that chart here, get above the high, this swing level on this high, and we'll start to look toward the 38.2% retracement of the move down, the last move down from this high right here to this low right here. That level comes in at 107.51, and then we start to look toward these high prices right through here before we get to this swing area in the 50% retracement at 107.88 of that same move down. That level is right here. So this swing area, by the way, goes back. I'm going to put it on the 4-hour chart to get a better view of that. This swing area right through here is right here is created going all the way back to these period right through here where we had different swing highs through here, and then the swing low right here before the market moved higher. Came back toward that area here, went a little bit below it here, and then reestablished support here and here and here and here before breaking to the downside. And our last moves to the upside in last week's trading fell short of the low of this area between 107.73 and 107.89, where the 50% retracement also comes into play. So this level right here is going to be a key barometer on the top side to get to and through on further momentum in that direction. 107.88 would be a more dovish Fed unchanged policy, more dovish Chair Powell. Also, be aware of the 38.2 and this falling 100 bar moving average in the 4-hour chart, which basically comes at 107.51. So get above this top side trend line, look for 107.51, then look for 107.88 on the top side. Get above those levels, and we start to look toward the 200-day moving average and the 200-hour moving average on this 4-hour chart, which are conveniently near converged near the 108.33 level. So those are the key levels that I'm looking for in the euro versus US dollar through the FOMC rate decision, and from a technical perspective from the euro versus US dollar. Hope they helped you out. Maybe earmark those levels, get your charts up to date as well. And it's a matter of whether or not the Fed is more hawkish or dovish in their unchanged policy decision tomorrow. And that's going to be the big question that traders are going to be pondering at 2 p.m. tomorrow. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.